Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's market price action. It's a Wednesday, October 23rd. Let's get into it. There's definitely a lot to talk about as we got a better price action today compared to yesterday. So as always, we'll be taking a look at broader market analysis, and then we'll take a look at what's really moved the markets today, take a look at currency baskets, and then we'll take a look at possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we jump into our market analysis, let's just jump right into the headlines and numbers. And as you can see, today was a little bit more volatile day. What we're seeing is the equity did pull back, and then the pullback is really coming off this rising yields. So we discussed this yesterday, how these yields are rising across, and that's really causing some of the jitters. And especially as we see a continuation in that pattern, that's not good for the equity market. So we saw that equity market pull back, but then we just saw some gains by the end of the day. So we'll take a look at it and see where it's going to go from here. Now, as far as the news goes, we only have Bank of Canada that cut rates by 50 basis points. That was expected, so nothing out of the ordinary. We talked about it yesterday. Big moves just usually happen, if there is a change in that expectation, a market has to reprice. So we didn't really see a whole lot of that. So that was a bit of a dud as far as the news event goes. Now, if you take a look at the numbers today, this is where you'll see that the things were looking a lot better across the board. Here we are, yen down 0.64. We have the dollar being up, and we're seeing the Swiss franc and the euro continue to be higher. And then the losers were really where the relative strength weakness has been. That's the Aussie and the Kiwi. But you actually had CAD closing out 0.40% as well. Like I said, it's not about what the news was, it's about how the markets reacted to it, and market just didn't care about that rate cut. Now we're looking at the pound being on the down low. You can see the euro is outperforming a little bit, but overall it was just a better trading day. And especially as we are getting these trending moves, dollar been on a tear. So just keep adding on to the gains, which is really good if you are, or following a directional trade. This is really where those multi-day moves have been coming from. Now, outside of that, you can take a look at the broader markets. You can see that the S&P was down 0.94%, so a bit of a dip there. We're seeing the world markets down close to 1%. Cryptos were down as well. Gold was down. Remember, gold has been flying high for the last few days, and here we are getting a bit of a top here. So we'll see if that's going to have a little bit more continuation to it, but this is definitely getting to the point where we're seeing some meaningful pullbacks, and now we're getting the oil down as well. So outside of the broader markets in the crypto world, you can see the Bitcoin were down, and Litecoin did the best. So overall, again, crypto kind of moving along with the market sentiment. So market sentiment dipped, and then we started to see everything sort of go towards the safety side here. Now, as far as the market outlook goes here, did anything change with today's move? Not really. But again, what happens tomorrow could really change things. Because if you take a look at the chart here, we are still in an uptrend. We are still above the 20 and the 50. But you can see that today we pierced through that 20-day moving average. And it actually bounced back towards the end of the day, and it's kind of closed above that 20-day moving average. So the trend remains intact. Now, these are the instances where you can say, well, this could be a pullback opportunity to buy into, or is this going to get weaker if we give up this 20-day moving average? So I think if you want to just look at this where we are, again, if the yields continue to rise, I think that's just going to be more problematic. And if the yields sort of pull back, pair some of the moves, then we could see the equity markets kind of bounce back a little bit here. So that's really where we are, in the broader markets. These pullbacks are expected, especially when things look extended. But the big question is it a trend change or is it just a pullback? And right now it's just a pullback. Now, if you take a look at the news events, and I think this is where tomorrow could be either a bullish day or it could be a bearish day. And that could really depend what the economic events comes out and we'll take a look at what the yield's going to do. Now, if you take a look at the economic events, we have the PMI figures out of Eurozone, we have figures out of the UK, and we also have figures out of the US as well. So remember, PMI, the focus is going to go back to the health of the economy. And again, if these numbers comes out better than expected, then economy is doing well. And if that's the case, I would expect the actual yields to kind of go back up further, because all this is happening because the economic data is actually coming up better than expected. So that I think will be a bigger impact on the yields going to the next 24 hours. If they come out weaker than expected, then we could see a bit of a repricing where maybe the yields couldn't pull back and the dollar can pull back because they look extended. So if the data doesn't come and support it, we can see some correction patterns there. So let's just jump into our currency analysis, take a look at velocity scores, and then we'll take a look at some possible setups. And looking at our velocity here, you can see that everything sort of moving along the lines as far as the trend goes. We are seeing the dollar continues to rip higher. Swiss franc, it was strong today on that risk-off move. The euro is strong. So a lot of the things that are kind of holding it much better, but really the big one is those dollar crosses. Now, the weaker side, we had the yen. So we are seeing a bit of a shift in the scores. Yen was looking a lot weaker, and then we had that little bit of a rally because markets started to pull back. So the question is, that was just a short-term, a pullback? Are we continue in that direction, or are we just going to take a pause? Same thing goes with the dollar. Dollar was sitting at a +3, but then we did pull back a little bit towards the end of the day. So we'll take a look at the charts and make that determination. But the important thing is to know what's moving so you can trade those currencies. That's giving you the best moves. So let's just jump into our possible setups ahead, and let's take a look at things.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So looking at our possible setups ahead, I'm just going to jump right into the bond yields first, because that's really what causing a lot of stir in the markets. As you can see, this is the 10-year bond yield, and you can see that this thing is still plowing higher. So even like the day to day, I know we saw a bit of a pullback in the equities. The yields didn't really move, or the way it closed didn't really give us a reversal signal yet. I think this could move off that the economic numbers tomorrow. But again, if you just take a look at the trajectory here, they are rising. I know that's causing concern, and here we are, almost back to where we were back in like July, before that big rate cut that we had. So right now, that's really where the trend is. But again, things can pull back, especially if the sentiment sort of shifts. But so far, as I take a look at this chart, I don't see a change yet. Now, if I take a look at the dollar chart, and this is where you can see that we did sort of. This is again a 4-hour chart. You can see a reversal candle today. Again, we're still in this uptrend, but we are definitely overbought. You can see that we kind of came right here in the RSI in the overbought territory and just sort of pulling back a little bit here. So I think it'll be healthy for dollar to maybe pull back a little bit. But again, the pullback is only getting us to the support level. If I take a look at the daily chart where we are, daily chart, you can see that this is a massive run. And I know this is the rally which I know traders sort of hated because it didn't really give us a good opportunity in between. This was really weak. It went from a -2 to -3 to a +2 to +3 without a whole lot of pause in between. We can say that this was a little bit of pause. But again, we moved. There was no sort of a pullback or a retest and go higher. This just was a U-turn. So dollar, again, looks extended to me. But at the same time, here we are, RSI. We are getting the overbought territory. And every time we get overbought, again, that's really where We could go sideways. We don't necessarily have to pull back. We can go sideways as well, but that's really where we are in the dollar. But if I go on a 4-hour chart, which is what I'm using for the trend, I think in the next 24 hours, or especially till tomorrow morning, we could see things sort of pull back a little bit here, and then based on the economic numbers, we could easily sort of snap back on the uptrend, or we could just continue pulling back a little bit. But I think it would be healthy for this to have a little slight pullback here. So don't really want to jump anything on the dollar bullishness here. It already looks extended, so we don't want to be chasing something here. Look for these bases. Look at the bases has been a great places to kind of leg in. All these bases were these more long opportunities. So right now we could be pulling back a little bit. But outside of that, we take a look at the Swiss franc. It's almost hitting the top end of the range. So the question is Swiss franc ready to break out? And this is where I would say, need a confirmation candle. I don't have a breakout yet. We got right up to the resistance. If it breaks above, then yes. Right now, it's too early to say that. We also have other currencies that are kind of doing well today, but if you take a look at the daily chart, they don't look the best. So the best looking daily chart is that dollar, and it's the yen. So you can see that yen did pull back as well. And I'm just going to look at intraday chart today, because you'll see when the equity markets start to pull back, right here, you can see the yen start to go do well. So if the equity markets, let's just take a look at the equity market charts as well, because the way market closed today, and here we are, here's a rally. So we did break lower all morning. We were going down. We have a bit of a bear rally here. So this could be just a buy the dip opportunity, or this could, sort of fail on this little bear rally. On this little rally here. So the question is, we'll take a look at it tomorrow. And again, mostly I think the news for the PMI numbers is actually going to move a needle on this one. But again, if the yields continue to rise, I think this could kind of fall back as a little bit of a rally. But for now, we're seeing a covering there. Now, if that's the case, if we see a continuation of that recovery in the markets, then we can see dollar sort of pull back. Even we can see the yen sort of pull back and reversed some of the move that we saw here. But if the equity markets start to get worse, or if they pull back further, I think that's where we see more safe flight towards safety. And I know this is where yen could shoot up a little bit here. You could see the Swiss franc breaks out a little bit there. You can see that just making a little tight base here. So based on those market scenarios, we could see a movement there. Now, if you take a look at the Aussie, remember Aussie has been the currency that's sort of kind of struggling here with this rising US dollar. But again, if you take a look at it, we are right at the support, bouncing a little bit here. We look at the reversal candle that we had right over here. So at this point, it looks like we're seeing a bit of a rally in the Aussie here. And if we take a look at the Kiwi, and Kiwi seems to be same thing, looks a lot weaker, and then here we're getting a rally. So the way things are looking is we could see a bit of a further bounce, or correction pattern, where we know things have been very much one way, but in the shorter term, it could catch a breather here as well. So Aussie, Kiwi, a lot of these currencies are kind of looking that way. Here's the CAD. I think CAD it's kind of holding in. Again, looks like CAD wants to break out to me. But again, we don't have a confirmation yet. If it breaks above this resistance level, that will be the case where I think the CAD can catch some traction. But again, this is what we talk about. Trade the markets in front of you, not what you expect. And I know by textbook, they're cutting rate by 50 basis points. We should at least see CAD being more weaker. But then here, that's not the case here. But that's okay. We're trading the price action, not what we think we should happen. So as I take a look at next 24 hours, I know these trades, dollar, these are the trades that are working. But in the shorter term, I think they could be in due for a slight pullback, or maybe go sideways a little bit here. So the game plan here, again, is looking for those consolidation or pullbacks. I think the economic data, so going into the Eurozone, UK, and looking at the US, I think that data will move or cause moves, especially if that data comes out. There's a big change. If it comes out way weaker than expected, or even there's an improvement there, I think that'll cause a bit of movement here in those currencies as well. So relief rallies we could expect that in the next 24 hours. So if this is where we say trend traders, this is where you get to either sit through those pullbacks, move your stops and let that work for you. And if you're just trading shorter term, and that's where the shorter term traders can really take advantage of that little shorter term relief rally. So you got to be understanding, where you are, a trend trader, taking a pause here, and then shorter term traders sort of getting a little active here for those correction patterns. So you don't have to trade correction patterns if you are a trend trader. So you really got to decide what strategy works the best. But nothing really goes forever. We see things take a pause, things pull back, but there's definitely opportunities here and there. But you have to be sort of clear on the timeline for those trades. But that's the game plan here. Thanks for joining. We'll see everyone in the next update. Happy trading. Bye.